Hey everyone, and welcome to Earnings Cheat Sheet for Friday, January 10th. It's a new year, but same old host here, Alexis, Garcia, and Ed Carson, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So Ed, great to see you again, and what you got for us today?
Yeah, I want to take a look at Taiwan Semiconductor, JPMorgan, and UnitedHealth.
All right, well, let's start with Taiwan Semi, which is scheduled to report Q4 earnings on Thursday, January 16th. Earnings are expected to rise 49% to $2.18 per share, and revenue is seen climbing 33% to $26.364 billion. And here's why we're watching Taiwan Semi. They're a critical part of this AI chip market. So we'll be looking at any commentary related to those products and any advanced AI chips, and we'll be watching CapEx spending figures. So Ed, Taiwan Semi reached all-time highs on January 6th. I think that was helped a little bit by Foxconn's performance in their quarterly results. And of course, we had that big NVIDIA speech by Jensen Huang at CES. You can see I'm wearing my NVIDIA leather today. But what are your thoughts here with Taiwan Semi as we approach earnings?
Yeah, and it's been doing very well. I mean, one of the things is this makes chips for almost everybody, it seems like. They make chips for NVIDIA, but they also make chips for Broadcom. They make chips for, Apple and a lot of others. So it's sort of like the picks and shovels, but like $10 million picks and shovels, where it's like whoever wins the AI chip race, Taiwan Semiconductor will probably be doing pretty well. That's generally thinking. Obviously, if AI chip demand in general fades, sure. But if there is a winner, if it does show growth, so this is just a huge bellwether just for the entire industry. They're one of the biggest buyers of chip equipment. So what they have to say about earnings, about guidance, about CapEx guidance is just enormously important, especially since it's basically the first one in the cycle. I mean, we haven't heard a whole lot from chip makers for a month or two in terms of real quarterly about results. So really sets the stage for the chip and tech sector.
And I know you've talked about this before, but we'll just hit the point again, why it's so important to look at related companies within these industries, because these stocks really can move in sympathy with them. So let's go ahead and jump to the Taiwan Semi chart, because as we see, it broke out of this cup with handle base back on December 23rd. It pulled back, it reached that all-time high on January 6th, but it is now pulled back within the buy zone. So what are you looking at with this chart as earnings approach?
Yeah, at this point, obviously heading into earnings, it'd be tough to do anything because you just don't know other than an option, because this could move around quite a bit. It's holding up relatively well. When you think about a lot of other growth stocks, they've fallen back, and you can look at the relative strength line. Yeah, the last couple of days, it's pulled back, but it was hitting new highs up until that point, where a lot of other growth stocks have had a choppier time. I mean, yeah, it's pulled back the last 2 days, but it's been hitting highs where a lot have not. So yeah, if this holds in this range, if it moves, there might be a buying opportunity. It just sort of depends on how earnings shake out. But definitely one to watch. It's definitely one of the better looking names, especially institutional quality. It's there it's not extended, acting well. So it's doing a lot of things you'd like, along with all the fundamentals that have been pretty strong and are improving along the way.
Right, and I'm on the weekly chart here, and we can see this accelerating earnings growth here and sales growth. Any thoughts here, Ed, on the weekly chart?
Yeah, it shows the same thing, a pretty strong uptrend. And it happened before, and this happens with a lot of chip equipment makers, is that the turn happened before the earnings really picked up. And that because people could see what was happening. It's going to be, the expectations are going to be, the comparisons are going to get tougher. So the growth rates may slow, but it's still really impressive. Now it's strong growth over strong growth that we're going to be seeing going forward into 2025. But yeah, it just shows a lot of strength. The up-down volume is only a 1.0. That's a little disappointing in the sense you'd like to see it a little stronger, but the AD rating is, I mean, that's okay. That's okay. The AD rating is a B. That's solid. That's just a solid chart. And, it's just setting up again, especially when you could put in the context of the market volatility, this has been doing very well.
All right, well, let's move on and take a look at JPMorgan, which is scheduled to report Q4 earnings on Tuesday, January 13th. Earnings are expected to rise 31% to $3.99 per share, and revenue is seen climbing 7.5% to $41.46 billion. And here's why we're watching JPMorgan. We'll be paying attention to commentary on expected lower regulatory capital burdens, and we'll also be paying attention to net interest income estimates as the yield curve normalizes. So JP Morgan really kicks off the Q4 earnings season next week, and we'll have updates from other financial names as well. This comes as analysts are kind of expecting a renewed surge in deal making and new listings under a new Trump administration. So what's the outlook here for JP Morgan?
Yeah, I think people are pretty positive on it. If you think you're going to have a pretty solid economy and then bank regulation maybe a little bit easier, which banks like when things are going well, then there's like, oh boy, when things go bad, sometimes there's, where's so and support, but that's going well. So that's a regulatory environment. Capital, these international capital rules are easier, so they should be able to deploy more capital into lending or honestly to buybacks or what have you. So it bodes well. It's a nice the industry specific news is fairly positive. The backdrop is fairly positive. You expect, as you say, more M&A. That net interest income should be improving just because now the old classic bank borrow short, lend long makes sense because after years of long-term treasury yields being below the short-term rates, it's now normalized. It's not crazy, yield curve, but still it makes it easier for banks, even giants like JP Morgan, which do a lot of other things than traditional banking. It still helps them in that regard. So yeah, there's a lot of positive backdrop for JP Morgan.
All right, well, let's take a look at the chart, Ed. This is officially working on a flat base with a 254.31 buy point. And nice to kind of see it trading tightly here around that 21-day line in recent days. As you mentioned, there's been a lot of market volatility here at the start of the year. So what are your thoughts on the chart?
Yeah, I mean, just point out that flat base. If it does move above the recent highs right there after earnings, I think that could be an early entry in that situation. Keep in mind, I would say, is that the general backdrop as of now, market's been sort of choppy. So you start to see these nice signs and then immediately pulls back. So it's not the, if it's a time, if you do things, test the waters, don't plunge in just in general with the market. But yeah, so this is acting well. There's a number of other banks, as you mentioned, that are reporting this day or right around this day. So we're going to get a ton of banks. So we'll get a really good picture about the banks. But yeah, I think this one has generally been seen as one of the better run big banks. And this is why we look at it. It's not only one of the biggest ones, it's just one of the things that's generally outperformed fairly well. And honestly, banks have had a strong run for a while now. And it's unusual tradition for quite a while. Ever since 2008, that banks would go on runs, but they wouldn't outperform long term. And, actually, if you look at that relative strength line, it's been improving for the past couple of years. So in the midst of a strong, and that's with the S&P rising 20% plus the last 2 years. So to outperform that is really impressive. And, we'll have to see how things go, but it does seem like the backdrop is positive for banks and JP Morgan in particular once again.
Right, and I'm on the weekly chart here, Ed, and we can kind of see it's holding right at that 10-week line. But any more thoughts here looking at the weekly chart?
No, it's been acting well. The relative strength line is near highs, and yeah, just needs to wait for earnings to see how if there's a buying opportunity there.
All right, well, let's move on to the next name on our list, which is UnitedHealthcare. That company reports earnings on Thursday, January 16th. The health insurer is expected to see Q4 earnings climb 9% to $6.74 per share, and analysts expect revenue to rise 8% to $101.616 billion. And here's why we're watching UnitedHealthcare. We'll be paying attention to the outlook for controlling costs in the wake of that UnitedHealth executive slaying that occurred at the end of 2024. Looking at UNH, beat third quarter earnings forecasts, but lowered the top range for their full year guidance. Seems like there were some challenges with Medicare Advantage utilization and state Medicaid reimbursements. But what's on your radar with UnitedHealthcare as we enter earnings?
Yeah, unlike these other two, the stock, and we'll look at it in a little bit, the stock is not doing particularly well. And because of all the concerns. I mean, let's be honest, it's like fourth quarter results will probably be fine, but people are really going to be looking ahead because people are going to because are these, is UnitedHealth, is the, and it'll be a harbinger of the rest of the industry and not just not just health insurers, but other health services fields in there. Can they control costs? Because obviously there seemed to be, it wasn't just that the slaying, but the backlash against any kind of cost controls. And it's just sort of the vicious commentary you see on social media. Uh, there's not going to be much appetite for that, it seems like. So it'll be interesting to see what UnitedHealth has to say about it, to be honest with you. I mean, it was a personal tragedy for a lot of people there, but there as a business, it's going to be interesting to see how that goes. As you're seeing, the stock has just completely plunged in the wake of that. Because of that is really the response that we saw afterward. Again, not going to think about all that and about what, but that's just an issue. If this is a company that has solid growth, but I think actually if you look at a weekly, hopefully a weekly will show it. This is a stock that can show steady growth, and then you just don't know when things go. You might actually want to go to a monthly, actually, in this case. I'm trying to think about, because sometimes it'll just have these really sharp drops, like it had around 2008. Okay, that's not bad. There was around 2019, we had some, in there, 2020. There's all, before that, like, or in the late things, just because politics can get involved. And so that's just something that with the health insurers is always a factor. They seem to over time figure it out. United Health actually has a lot of other things going on. But they're not as Medicare exposed as some others, but it's still going to be a big challenge for United Health and the other industry navigating, uh, pretty fraught social landscape right now.
That's right. And taking a closer look at the daily chart, Ed, as you mentioned, or we see this plunge here when that tragic news happened. And it seems like it's trying to come off these lows. But what would you like to see in this chart as earnings approach? I mean, obviously, getting above that 200-day line probably is the next step.
Yeah, and there's also the volume isn't sort of light. Now, some of that, the volume is average volume is picked up. There's that line you were pointing to. Average volume is picked up, but that's because it was so heavy on the downside, and we're not seeing a big massive. It feels a little bit more of a wedging. It's not low volume, but the volume on the downside is straight down basically. So that's a lot of damage. It just takes time to repair. It'd be very unusual for this to come right back. This might take several months. It might take quite a while. I mean, anything can happen. And if there's something, but it does, so obviously it could come back, but it wouldn't be normal for a stock to fall like that and to come right back. So it's probably going to take some time. So this is probably off the table for most people, unless you have extremely long horizons. Totally a style that I wouldn't use here. So, but yeah, we would say at IBD, it's just not, you have to wait for this to show real repair.
All right. Well, those were some of the big names on our radar, but let's take a look at a few more, shall we, Ed? And of course, there's a lot of financials reporting next week. So let's take a look at Goldman Sachs. This one working on a base 612.73 buy point, and it looks like it's testing that 50-day line. So what are your thoughts?
It looks a lot like JPMorgan, gets above early entry, it's above recent highs. It could be an early entry, after earnings at this point, I think. Solid growth, a lot of the same factors that for Goldman Sachs, especially on the capital markets, that would influence JPMorgan.
All right, let's take a look at Citigroup then, Ed. This one broke out on November 6th, and it looks like it's just out of that buy zone here over the last week. But what are your thoughts here on the chart?
Yeah, it looks a little extended. I mean, maybe you could have bought it on that day, as sort of like as an add-on buy or some such, especially, but as it sort of bounced off the 10-week line, bounced off there. But it feels a little extended right now, but acting quite well. Relative strength line coming up. I don't think this has outperformed as well over the prior couple of years. This hasn't traditionally been doing as well, but it seems to be having a nice run right now. One all.
All right, well, let's take a look then at Morgan Stanley. This one also reports earnings next week. Another one working on a base here with a 136.24 buy point, and again, right at that 50-day line.
Yeah, I mean, very similar. I mean, it's interesting how they showing similar action. And honestly, even outside of financials, there's a lot of stocks that are trying to find support around the 50-day line. And just in general, a lot of these stocks where the one good day would look very interesting and one bad day would start looking very damaged. It's like a team right before the playoffs, and they're 7-7. You look at 8-7, it's like, hey, they could, or 7-8. It's just a big difference. And I think that's where we are with a lot of stocks.
All right, well, let's take a look at Bank of America then. Again, another one in a base 48.08 buy point. What are your thoughts here?
Yeah, technically, this was probably, a couple of days ago, actually was flashing a buy signal, early entry. This wasn't as pushed up, whereas Morgan Stanley was sort of clearly above the prior base. This one is sort of is somewhat just above the prior base, if you sort of, see how that is. So it hasn't been outperforming as much as, say, a few of the other names. So I think that's another thing to look at. Look at that pattern, but this is acting well. Again, we're going to get the end of next week. We're going to have a pretty good idea. A lot of big banks.
All right, let's take a look at one more with BlackRock. This one looks like it broke below that 50-day line on January 2nd, and it's uh, fallen below that 1,000 level. But what are your thoughts here as it tries to maybe bottom out?
Yeah, now this is coming down a little bit. It was sort of like cleared a tiny consolidation, fallen back. Some of this might be Bitcoin related because they're a big Bitcoin ETF play, because that was a pretty sharp drop yesterday, and I think that's probably related to Bitcoin. So that's always a factor, but I think if it got above the 50-day line, there could probably be breaking a trend line again. So we'll just have to see about that. But Bitcoin is always going to give it the volatility. So you have a lot of juice on the upside and downside that you might not have had, say, a year or two ago.
All right, well, let's wrap up by looking at miner Rio Tinto. What are your thoughts here?
There's still a lot of concerns about the global economy, especially China. This is like demand for iron, demand for core, and become for copper ore, just not really there. I mean, the prices are still pretty weak. So, you'd like to see some of these names improve if you think that, to have that global economy. But so that is an issue out there, even though the US economy is still pretty strong, but China and Europe, which isn't as important for these raw materials, but still you can see a long slide for these names. It goes on many runs, but it keeps on having it's generally had lower lows and especially lower highs along the way here.
All right. Well, Ed, thanks so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, you can tune into Stock Market Today with Alyssa Quorum. That goes live after the closing bell. And thanks so much for watching. We'll see you next week.